The role of the World Bank, IMF, and UN in global power dynamics. The World Bank, the United Nations, UN, and the International Monetary Fund, IMF, are widely regarded as institutions with altruistic missions, poverty alleviation, economic stabilization, and global cooperation. However, many critics argue that these institutions often serve the interests of a few powerful families or elite groups operating behind the scenes, using policies that benefit the powerful while perpetuating the dependency and poverty of weaker nations. This essay will explore how these organizations may perpetuate cycles of poverty rather than alleviate them, through mechanisms that often place indebted nations at the mercy of global powers. 1. The World Bank and IMF as tools of economic control. The World Bank and IMF were created after World War II with the stated goal of promoting global economic stability and aiding developing nations. However, both institutions often impose stringent conditions on their loans that limit the sovereignty of borrowing countries, forcing them into economic policies that align with the interests of powerful states and elite groups rather than fostering genuine, long-term development. Examples of structural adjustment programs, SAPs in the 1980s and 1990s. The World Bank and IMF imposed SAPs on many developing countries, particularly in Africa and Latin America. These programs required countries to reduce public spending, privatize industries, and open their markets to foreign investment in exchange for loans. For example, in Ghana, the implementation of SAPs led to cuts in public health and education funding, ultimately worsening poverty and inequality. While these policies benefited multinational corporations and elite investors, they often devastated local economies. Cycle of debt. Countries that take on World Bank and IMF loans frequently find themselves trapped in cycles of debt, unable to repay their loans without taking on more debt. This debt dependency means that poorer countries must adhere to the economic and political expectations of these institutions, limiting their ability to make decisions independently and forcing them to prioritize debt repayment over social services and infrastructure. 2. Hidden agendas and the influence of elite groups. Many critics argue that the World Bank and IMF serve the interests of powerful, often hidden elites rather than the populations of the countries they claim to support. These elites allegedly exert influence through international institutions, ensuring policies that protect their wealth and control over resources, while local populations continue to suffer from poverty. Case study: Haiti. After the 2010 earthquake in Haiti, the World Bank and IMF provided significant loans, which Haiti's leaders accepted under dire conditions. The funds, however, largely went toward projects managed by international contractors, not local infrastructure. Moreover, the loans have created long-term debt obligations for Haiti, which now faces limited freedom to implement its own economic policies, as a significant portion of its budget is allocated to debt repayment. Privatization and resource control. Countries that are forced to privatize key industries under World Bank and IMF mandates often see their natural resources exploited by foreign investors. In Zambia, for example, the privatization of the copper mining industry, one of the country's most valuable resources, resulted in foreign ownership of a critical industry, with minimal benefits for the local population. This type of arrangement effectively allows global elites to control valuable natural resources while leaving the local population impoverished and marginalized. 3. The role of the UN in legitimizing power structures. While the UN's mission emphasizes peace and humanitarian aid, its actions and policies often align with the interests of powerful states and elite groups, lending legitimacy to interventions and economic policies that maintain the status quo. Selective intervention. The UN has been criticized for selective intervention, where action is taken in cases that align with the interests of powerful countries or their allies, while other crises receive limited or no attention. For example, the UN's role in Haiti, where peacekeeping forces have been stationed since 2004, has been criticized for maintaining control over the country rather than fostering genuine sovereignty and development. Influence of veto power in the Security Council. The UN Security Council is dominated by 5 permanent members: the US, UK, France, Russia, and China, who hold veto power. This structure gives disproportionate influence to powerful nations, allowing them to shape UN policy in ways that serve their interests and to block initiatives that challenge their influence. This arrangement undermines the UN's role as a democratic institution for global peace, effectively serving as a tool for elite interests rather than a means of addressing global inequality. 4. Links to intelligence agencies and covert influence. Another criticism frequently raised is the association of these international organizations with intelligence agencies, like the CIA, which allegedly use these institutions to exert covert influence over nations and maintain strategic control in regions of interest. CIA influence. It is alleged that intelligence agencies sometimes operate alongside institutions like the World Bank and IMF, using the influence of these organizations to carry out the political objectives of powerful nations. For instance, during the Cold War, the CIA reportedly used various means to ensure that countries accepted loans or policies favorable to U.S. interests, ensuring influence over their political and economic directions. Case of Chile. In the 1970s, the CIA actively supported the coup that removed democratically elected Chilean President Salvador Allende, partly because his policies threatened U.S. corporate interests in the region. Once the new government was in place, IMF and World Bank policies were implemented that aligned with U.S. economic interests, consolidating the influence of American elites over Chile's resources and economy. 5. Conclusion. The cycle of dependency and economic control. Critics argue that international institutions like the World Bank, IMF, and UN perpetuate cycles of dependency and poverty rather than alleviating them. The stringent loan conditions and political pressure from powerful states force developing countries into subservient economic roles, where natural resources and economic policies are effectively controlled by foreign interests. Although these institutions purport to support development and alleviate poverty, their actions often benefit a narrow elite, using poverty alleviation as a cover for maintaining global dominance and control. Ultimately, for genuine progress to occur, there needs to be a reevaluation of the policies and structures governing these institutions to ensure they truly serve the interests of developing nations rather than those of hidden, powerful groups. Otherwise, developing countries may remain locked in a cycle of poverty, dependency, and foreign control.